Now what we want to do is we're going to use some numbers found in chapter 4 on page number 2, or excuse me, 5, chapter 5, page 2. We're going to use the 5 transactions that are listed there. The first transaction is to record the purchases of raw material. Let me tell you a little bit about this company. This company is just starting up this month. Prior to this month, they had no activity whatsoever, okay? Their raw materials warehouse was empty. Their work in progress or assembly room was empty, and they had absolutely, obviously, no finished goods sitting in the finished goods warehouse. So when we're looking at the starting inventory up here, what's the value in starting inventory? 0. It's 0 because we didn't have anything at the beginning of the month, okay? So it's going to be 0 in all 4 inventory cases. Okay? Now, as entry number 1 shows you on page number 5.2, we bought during the month $20,000 worth of raw materials. Let's just go ahead. I'm going to assign, using T accounts, I'm going to track all these entries through this process. Now, I'll tell you that I use these boxes to help illustrate what's happening. And it helps every month to actually draw the boxes. But the boxes themselves are not a journal, and they will not create the entry. They only simply tell you what the entry is. Okay? So when we're writing these checks for $20,000, the entry is going to be probably made or entered into a, which journal? Cash disbursements journal. And the total of all the purchases of raw materials will in essence be a credit to the bank of $20,000 and a debit to raw materials inventory, debit for $20,000. Okay? Just like that entry shows. Now that may be a combination of 20 or 30 or 40 different checks that make up that, or it could be just one check if we had just one vendor and got all of our parts, raw materials from that one vendor. Okay, entry number 2 relates to payroll. So which journal do we record payroll in? Payroll journal, right? Now I'm going to, in order to simplify this transaction and ignore withholdings, I'm going to assume there are no taxes, okay? Wouldn't it be wonderful? Okay, this factory is out on an island. It's a country all by itself, and they don't pay taxes out there. Okay. Now, so we have 2 accounts again. One is going to be the bank where we write the checks out of, and the amount of the labor was $10,000 paid during the month. And it may be 3 employees and they're paid twice a month or something like that. But the total of all the checks adds up to $10,000, and it will be a credit to the bank and a debit to labor inventory, $10,000. Now, let's stop for a second and think about that. Normally, in the past, for most businesses, when we have paid somebody money, what have we debited? No? Payroll expense. We've always debited an expense, right, for the gross amount. And an expense falls as an earnings account, right? Okay. Now, where did I tell you this account lands, or where is it at in the general ledger? It's a current asset. So this is totally different, isn't it, than typically. There's 2 things we have to note. One is that when we're talking about direct labor, we're talking about only the individuals that work on the assembly line itself. That's it. We're not talking about any of the support labor, albeit it's important to have that support labor, but it's only the assembly workers that go under the direct labor account, not the others. Okay, so in this camper factory, I was the new guy on the block, and so I got the crummiest job in the whole factory. Have you ever installed insulation, fiberglass insulation on a hot, muggy day? Oh, terrible job. That's why I only worked there one summer, okay? And so I installed the insulation, I pulled the wire and so forth. And interesting job, but it was a miserable job. Well, I worked directly on the campers. I was on the assembly line. So I was direct labor. However, we had a shop foreman that kind of oversaw things. He didn't actually get his hands dirty. He just watched it happen. And then we also had a fellow that kept things clean around, ran parts for us. He didn't work directly on the assembly line either. He just supported those who were working the assembly line. Okay? So those two, the shop foreman and the support fellow, they were not direct labor. Okay? We're going to handle their salary in a different location. So which ones are these? This direct labor? Only those that working on the assembly line. Okay? And we paid them $10,000. Now, throughout the month, we just made these standard entries, these entries that we're talking about here. But at the end of the month, now is the time we have to calculate how much transfers from one inventory account to the next inventory account. These raw materials here, we put in $20,000 in purchases here, right? And direct labor, we put in $10,000 in purchases. That's how much we purchased during the month. Now, at the end of the month, we're going to do an inventory on the raw materials. We're going to send someone back into the inventory or the raw materials room and have them count the number of items that are in there and price them out, cost them out. We're not asking them to do anything that they shouldn't already be doing, because the last thing you want to do in a manufacturing plant is run out of something. Why? Yeah, it stops the whole line. If you're just missing one item, it could stop the whole line, and everybody goes out and takes a long break until you get those things got in there. So they're watching that raw materials inventory very closely. And at the end of the month, they're going to go in and price it. Now, this guy went in there, the raw materials warehouseman or whoever we sent in there, and he came back out and he says, well, it looks like there's about $13,500 worth of raw materials still in that room. So what do we call that $13,500? Yeah, that's our ending inventory, isn't it? So we're going to put $13,500. Now, if we purchased $20,000 worth of goods and we ended up with $13,500, where'd the other $6,500 go to? Yeah, it must have gone into that assembly line. Now, is that a whole lot easier than keeping track of every individual transfer from one to the other? Sure, we do it all in one time. Now, we're going to make an entry in the general journal to record that transfer. Anyone want to guess what that entry is going to look like? Becky, go ahead.
It'd be a credit to the raw materials inventory.
Okay, for how much?
For $6,500.
Good.
And a debit to work in progress inventory of $6,500.
Okay. So after making that entry, what's the balance in raw materials inventory?
$13,500.
And that's what we want, isn't it? We want it to be $13,500. So we're in good shape there. Now, direct labor is a little bit different animal. Raw materials we buy in anticipation of using them, right? We buy the raw materials long before we use them. So we have an inventory sitting in there, right? How do we buy labor?
You pay it as it's...
After it's used, don't you? Huh? We don't pay for it in advance. And so when we're looking at the inventory at the end, how much inventory of raw material or direct labor do we still have left at the end of the month that we can use next month? Nothing. So the balance in direct labor inventory is always going to be zero. So our cost of $10,000 went where? Yes, went up into work in progress. Okay? So we need to make an entry. Marie, what's that entry going to look like?
It's debit work in progress.
Good.
credits direct labor.
Excellent. Okay? So the balance in labor inventory is now 0. Okay? Now, we have in work in progress $16,500 of inputs. Okay? So that's going to go into our purchases. $16,500. We purchased, in essence, $6,500 of raw materials and $10,000 of direct labor into this process. Now that direct labor, is that a real cost? When we make calculators like this right here, it's made up of plastic, right? Maybe some pieces and parts to it. I don't know what all's in here. Okay? But what is also included in this is somebody's time, right? So the cost or the value of this calculator includes time and parts. Is that what we're showing here? Sure are. $16,500 worth of inventory has gone in to prepare these items here. Now, if we produced 15 items total, and we looked at the assembly line at the end of the month, and there was nothing on there, nothing left, so we started out with an empty assembly line, we ended with an empty assembly line, and we produced 15 items completely done. How much did it cost us per item? Okay, so what are you saying? You're saying 16,500 divided by 15, which equals what? $1,100 a piece. Now that's pretty easy, isn't it? That's how much it costs us per item, and that makes sense. Does everybody follow that? Okay. Now, if you're not clear to this point, this is a good time to raise your hand because I'm going to blow you away if you're not clear at this point. Are you clear? Looking for nods. Okay. Pretty straightforward so far. Okay. However, I'm going to complicate it now a moment. Again, it's simple if you know the $16,500 went to produce 15 items. That's easy. But what if, in addition to these 15 items, we had 3 items that were not yet complete? Do we need to assign value to those 3 items too? Yeah, we do. Now I just complicated it, right? Okay. Because we need to know how much value to assign to that item, because the value we assign to these 3 items is the ending inventory for work in progress. Because those 3 items were still in progress at the end of the month. And so we have to assign a value to them. Now this is the one place, up till now, we've used good, solid numbers. If we could figure out by using some calculation process what percentage complete each of these were, could we then develop an estimate of what a work in progress was? Yeah. Okay. Well, try to accept this. Let's imagine that we know this item, this first item on the assembly line, it's just kind of barely started. It's fairly new, okay? Doesn't have very much cost involved in it yet. The second item here is about halfway done, and the third item, it's almost completed, okay? So as they advance down the assembly line, they're getting closer and closer to complete. Would you accept the assumption that these 3 items are on average half complete? You would accept that? Now, true, that may not be 100% accurate, but is it going to be fairly close?
Yes.
Okay? So that means that we have 15 items that are 100% complete, right? And we have 3 items that are 50% complete. So what is the equivalent number of completed units? What did I hear? 16 and a half. And you got that, Rebecca, by doing what?
Average step 3 and count as 1.5.
Very good. and then you took the 15 with it, add them together, 16.5 units. Okay? So let's say, well, how much did it cost us to produce these 16.5 units? Right. We got that by taking the $16,500, dividing it by 16.5 units completed, and that equals $1,000 per unit. I wish I could say that it always comes out nice round numbers like that. As you know, it doesn't do that, and every month it's going to come out a little bit different, one way or another. It may be up one month and down another month, but it should remain fairly stable over time. Now that means that if it cost us $1,000 per unit to produce a unit, how much have we invested then in those 3 partially completed units? $1,500, right? Because we've got equivalent of 1.5 completed units times $1,000 per unit, or $1,500 per unit. So that's our ending inventory. Okay? Now, if we had 0, we purchased 16,500, we ended with 1,500. What is our cost of sales for work in progress? $15,000. Where'd that $15,000, where does it go to?
Finished goods purchase.
That's right. To finished goods purchases, because the finished goods warehouseman now has purchased $15,000 worth of finished goods from the assembly line. Okay? What's the entry going to look like? June, what's the entry going to look like?
Debit, finished goods.
Okay, so we're going to create another inventory here, finished goods inventory, and we're going to debit it for how much, Shirley?
15.
Okay, and
You are crediting work in progress.
okay, very good. Okay, now what's the balance in work in progress inventory after doing that?
15.
Is that what we wanted it to be? It is. Okay, now we have $15,000 worth of purchases in the finished goods inventory, right? Okay, now how are we going to figure out what our ending inventory is in finished goods?
How much we've sold.
How much we've, well, what we're going to do is we're going to go in and count how many finished goods we still have, right? So we send a guy back in the finished goods warehouse where all these 15 things went into. And he comes back out and he says, there's none in there. Not one. Now, if there's none in there, what's our ending inventory? 0. Where'd those 15 go? Yeah, we must have sold them. So our cost of goods sold is how much? Okay, let's make this last entry that's not shown in your books there, but I'm going to make it. Let's assume now that we sold each of those goods for $3,000 a piece. Each of those items we sold for $3,000 a piece. Okay? So, and we got a check in the mail for those items. So what's the entry going to look like for selling those $3,000 worth of goods?
Bank account.
Yeah, we're going to debit the bank account for how much? $45,000. Good. Okay.
Credit sales to $45,000.
Credit sales, $45,000. Okay, good.
Then we have to book the cost of sales,
Uh-huh.
which is debit $15,000.
Okay, we're going to debit cost of sales $15,000.
And credit finished goods.
Very good. Very good. What's our balance in finished goods inventory now? Exactly what we want it to be, right? We recognize that we have sold $45,000 of an item that cost us $15,000. And so our gross profit then on this sale is how much? $30,000. Now, do you see how that whole process goes over time? Okay? So we look at the finished value. We have in raw materials still $13,500 worth of raw materials to start the new month out with. We don't have any labor to start a month out with because we pay that after the fact. We've got on the assembly line $1,500 worth of goods, right? And we have in finished goods zero inventory there because everything was sold. Okay? So, starting out next month, what would we do? We'll go through the same thing, but our starting inventory is in raw materials next month is how much? $13,500. What's our starting inventory in direct labor next month? Zero. Our starting inventory in work in progress? $1,500, right? Because that last month's ending inventory becomes this month's starting inventory, and our starting inventory in finished goods will be zero because there weren't any left at the end of last month. So last month's ending inventory becomes this month's starting inventory. And you go through the same process again. And it works every single month. The only thing we had to assume in this whole process is we had to assume that those work in progress items, whatever was left on the assembly line at the end of the month, they were half complete. Now, if we wanted to take the time and say, well, maybe we got 10 items and this one's about 12% complete and this one's about 16% complete, that's what they do in the big companies. They go through and they estimate more exactly because they've got those stopwatch timings. They know exactly what the cost of each of the goods were. Unfortunately, we as the accountants are, one, probably not qualified to make that decision, but secondly, we probably don't have the time to go through that, and we're probably going to be pretty darn close just by assuming 50%. Okay?